Because indexes and ETFs are actually ideal for busy professionals. Now, you may be coming from any walk of life. So some of you may be in retail, some of you may be in technology or finance or energy or consumer products. You may be coming from any background, and you probably know your industry well. So, people generally tend to gravitate towards stocks that they know and understand. And there's a good reason for that, because they understand the companies. And that's a very good reason. You need to understand the companies that you're dealing with. But sometimes, even if you're dealing with companies that you know, you do get some surprises. The company may be involved in a lawsuit, there might be some other kind of bad news, or something happened in their factory in China, or if you're with any of the energy companies, you're always worried about some kind of an oil spill somewhere which will tank your stock. So even if you deal with companies that you know, there are always these uncertainties of all kinds. And if your stock or if your company gets caught up in that kind of a mess, then the stock is subjected to severe volatility, the prices crash and things like that. So overall, I think a good strategy for busy professionals would be to have a very healthy mix of index and ETF components in their portfolio. So when you say portfolio, what I mean is we are just talking about a swing trading portfolio. In your long term, where you buy and hold, if you do have such a portfolio, that's perfectly fine. But we are talking about a swing trading portfolio where you can generate a certain amount per month. It depends on, of course, on each individual, what kind of a capital account they have. Some people may open an account for $25,000, and others may open an account for $1 million. So it all depends on your individual situation. But let's say you wanted to take home a certain income every month, and you wanted that in a stable manner. Of course, in the markets, nothing really is ever that stable, but in some kind of a reliable manner, as long as you did your homework properly and you put your trades in properly, you can do something like that. So we've seen on the module on spreads where we've seen income generating strategies, and that we can put these strategies on a month by month basis. So you don't have to always deal in stocks. If you've never dealt with ETFs and indexes before, I want to tell you these instruments are fantastic because they give you instant diversification. So what do we mean by that? We've covered some of this in the course in module 1, where we covered indexes and ETFs, but I just want to get into a little bit more detail here, because I feel that indexes and ETFs should be a pretty big component of every busy professional's trading portfolio. So you can buy ETFs that have a certain sector. So let's say you're coming from the technology industry. You have a technology ETF. If you're coming from finance, you have a finance ETF. If you're coming from energy, you have an energy ETF. So rather than take a single company exposure into some of these stocks, you would much rather go into the ETF itself and look at the options on the ETFs. Now, all these major ETFs have fantastic liquidity, so you don't need to worry about whether you're selecting something that nobody is going to be interested in or anything. Most of these sector ETFs and the major index ETFs trade in millions of shares per day, so you don't have to worry about liquidity. And ETFs are the equivalent of mutual funds. So just like mutual funds, ETFs are instantly diversified. So if you're coming from technology, for example, the technology ETF is going to have investments into like 100 different technology companies, and some of them will be the big ones. You'll have the Apples and the Googles and the Yahoos and all of that inside that ETF. So you're dealing with very big, large companies. You're dealing with a certain diversification that's designed and built into the instrument itself.